Alright, for this video we want to go through how to report non-US source interest income on your tax return. So we've got a Schedule B here to report interest and dividend income for the 2023 tax year, and it is part of this taxpayer's full 1040. So we'll go through the full 1040, we'll cover Schedule B, and we have the Form 1116 for the foreign tax credit. Now, in addition to this, I've got a sample Form 1099 INT here provided by the broker, and this is a summary of all the interest that was paid on the account, but it also includes some foreign taxes that were withheld at source. And so the brokerage statement also has some supplemental information here that tells us how much of the income is foreign source and what taxes were withheld. And then lastly, we've got the form instructions to the 1116, the foreign tax credit, which we'll reference as well. So if we start with the Form 1099 INT provided by the broker, most of the time when you see a 1099 INT, it might look something like this, right? So there's this pre-formatted version that the IRS provides, but the brokers and other payers of interest can use a substantially equivalent version, which often provides more information. And so that's what you might see here with your own brokerage statements, is they have all the same fields, right? Box 1, interest, box 2, early withdrawal penalty, but then they use this format to attach additional information behind it. So with this one, what we see here is the taxpayer had $1,150 of interest paid into their account and $50 of foreign taxes paid. So if we look at their Form 1040, the total amount of interest income, whether it's U.S. or foreign source, is reported on 2B. Right, so our box 1 interest income, $1,150, is reported on 2B, and that total is flowing through from Schedule B. So we've got Part 1 interest income, not real brokerage company Inc., and we've got the $1,150. So that's the box 1 interest income amount for $1,150. Now box 6, we have foreign taxes paid, $50. We need some more information on what income that is attached to and from what source. So in other words, what country does it come from? And so that's where the additional information down here is helpful. So what we can see is the taxpayer was invested in some bonds in Barbados, and the amount of interest on those bonds was $1,000, and that's going to be $1,000 of foreign source income. That's important because what we can see up here is that of the 1,150, 1,000 is foreign source, and so we can presume that the difference there is $150 of just regular U.S. interest. So all of that interest, again, is still reported as taxable interest on Part 1, but now we know what portion is U.S. source versus foreign source income. So that's where we turn it over to the Form 1116 to claim the foreign tax credit. Now, the Form 1116 for foreign tax credits, this is where you report your total foreign source income, the amount of foreign taxes you paid or had withheld, and then ultimately calculate how much of a credit you can get. Now, here's what's really important about the 1116. The foreign tax credit, once it's calculated, is reported on Schedule 3 in Part 1 for non-refundable credits. Now, on line 1 here, we can see the FTC amount, but notice how it asks, we would attach the 1116 if it's required. Under certain circumstances, the 1116 is not required to be included. And so those instructions are laid out on page 1 and 2 of the instructions here. So, under what circumstances could you just elect not to use the 1116 and just report the amount of taxes? So you have to meet all of these conditions. So the first one is all of the foreign source gross income was passive. And this includes portfolio incomes. All right, so portfolio income are interest, dividends, rents, royalties, things like that. The second requirement is all the income had to be reported on a qualified payee statement. So that includes things like 1099 div, 1099 INT, which is what we have, and a Schedule K1 or K3s, right? So if you have it reported to you in that manner, then you can potentially elect not to use the 1116. The last one comes down to the amount, right? So if the total creditable foreign taxes are not more than $300 and you meet those other two requirements, you can forego filing the 1116. So if that were the case, and that is the case in this circumstance, Adam could report all the income as he had and then just enter the $50 of foreign taxes and not have to do the 1116. In our case here, we're going to elect to include it anyway, just for completeness, so we can see how that computation is made on the 1116. So when we look at the 1116, in column A, right, we only have foreign source income for one country. So we've got passive category income, right? This is portfolio income, interest income. We are a resident of the United States, so Adam Taxpayer is a U.S. resident. And in Part 1I, we have Barbados as the foreign country where the income is coming from. It's interest income, and it's $1,000 of interest income. All right, so the total interest, remember, it's $1,150, but we're only reporting this amount because this is the amount of foreign source income as it was told to us on the supplemental information here, right? Okay, so in completing the rest of the 1116, now I do have more detailed tutorials on the 1116. I'll put those links below, so I'm going to go through this kind of quickly. But key points to remember here is this section is designed to allocate expenses to your foreign source income proportionately. So what we're doing is we're testing on line D. We have foreign source gross income is $1,000. Our total gross income from all sources is $96,150. And so we multiply that proportion by our standard deduction here because we're claiming the standard deduction. And so at the end of the day, what we're seeing here is we are allocating $144 worth of expenses to that foreign source income. So we have $1,000 in foreign source income. We have a $144 allocation of expense. And so effectively our net foreign source income here is $856. Now in Part 2, foreign taxes paid. If the taxes withheld are reported to you on a 1099 or K1, instead of entering the date paid or accrued, you can enter this language, just 1099 taxes. That indicates that withholding was done at source and reported on a 1099. And so we've got in U.S. dollars here, $50 of taxes withheld at source. And so the total foreign taxes paid or accrued is going to be $50. Now, Part 3 is where we figure the amount of credit that we can claim. So we've got $50 of available foreign taxes. And then on these line items down here, we figure out any limitation that would apply, if any. So in other words, what we need here is, do we have enough foreign source income to be able to take the full amount of the credit? If you don't, right, then what you have is a foreign tax credit carryover. I've got more videos covering the elaborate calculations that go into that, so go check those out if you want more information. But all in, what we can see here is the maximum amount of available credit that we would be able to take based on this allocation of income, and our taxes is $140. Well, that's fine because we only have $50 of available tax. So we've got the smaller amount there. This is our total foreign tax credit, and so that's reported up on Schedule 3, Part 1, Line 1. So once the foreign tax credit is calculated, it flows back to page 2 of the 1040, and we can see on line 20, we have the amount from Schedule 3, line 8, $50. So our total taxes, $13,419. We have a $50 foreign tax credit, so we can reduce our taxes owed from $13,419 to $13,369, and then we apply all the payments that Adam is available to claim. So that is a pretty quick tutorial run through as to how those foreign taxes work. Remember, keep in mind these de minimis rules for the election to not have to file that 1116. In most cases, I see taxpayers have just a little bit of foreign taxes, so they often qualify for this, and it does make your life a little easier rather than having to fill out the 1116 to go ahead and just elect not to use it and just put down the the total foreign taxes that you had withheld that were reported to you on that 1099. All right, so that covers it for this tutorial. I hope that was helpful. If you have any questions, feel free to leave a comment below. Again, go check out those other 1116 videos I have. Cover some fact patterns in much more detail and how they're calculated. And as always, appreciate you watching and I look forward to seeing you on the next video. Thanks.